China's trade delegation arrives in Washington for the signing of the Phase 1 trade deal. From the Bloomberg Interactive Brokers Studio, welcome to the second hour of Balance of Power. It's been a long time coming, but Wednesday is the day for the signing of the first phase of a trade deal with China, with Vice Premier Liu He arriving in Washington with his delegation today. We welcome now Mary Lovely, Professor of Economics at the Syracuse Maxwell School of Citizenship and Public Affairs. Professor Lovely is also a senior fellow at the Peterson Institute for International Economics. Professor, welcome. Good to have you with us. So I guess we have been waiting so very long. What will be different on Thursday than we have today?
Well, yes, it gives me chills to hear you say that they've arrived in D.C. today. We have been waiting for this a long time. The markets have been waiting for this time and have been responding strongly to what we might think of as a truce to the trade conflict. On Thursday, I don't think we'll see anything different. The markets have been building this in. We've had the news for a while. We have to scrutinize the actual text, and if that text matches up to what's been advertised so far, I think we'll have smooth sailing.
One of the questions that's being asked, maybe by skeptics, is whether China will follow through on whatever they agree to in that 86-page agreement, because there's been some track record here that people say raises doubts about that. When will we have a sense whether they're actually following through?
Well, this is going to unfold over the rest of the year for sure. Again, we have to see the actual text because many people have pointed out, rightly so, I think, that meeting these very ambitious targets for purchases, particularly of agricultural goods, is something that we probably there needs to be some flexibility built in, not simply because China might not follow through, but also because there's questions about how fast the U.S. can increase its supply. We have to remember that farmers had the blanket pulled out from under them before, and this agreement is a truce, but it still includes a lot of provisions, so-called enforcement provisions, that allow a pretty quick snapback of tariffs and a reinstallation of hostilities if things go wrong. So it is a true some decrease in the uncertainty that producers, including agricultural producers, felt, but it's by no means an ironclad deal that's going to resolve a lot of the uncertainty that U.S. manufacturers and farmers feel.
And if there is a snapback, the tariffs that are not being imposed are the ones that were going to go into effect in December, as I understand, and half of the tariffs that went into effect in September. There's a lot of other tariffs out there sitting out there that are not involved in being rolled back at all.
There's a lot of other tariffs sitting up there. Many economists call this the new normal. What I think the American public needs to, really appreciate is that these taxes are a drag on American manufacturing, particularly small and medium-sized manufacturers who can't afford fancy lobbyists and lawyers to go in and try to claim exemptions. So we're still seeing drag on manufacturing from this. It's a very large tax on American households. Economists have estimated costing households an estimated $800 a year, all told, for the Trump tariffs. I think that we can't say that this is the end of the process. We did have some good news last week. There's suggestions that China and the U.S. to semi-annual talks to try to continue to ease tensions. And I think a lot of people would welcome that, since a lot of structural problems remain, even if we have a successful outcome to the so-called Phase 2, which will, according to the administration, those negotiations will get underway right away.
Yeah, Professor, one of the things I guess we'll get a sense of when we see the text of this agreement being signed on Wednesday is how much does Phase 1 cover and how much is left for Phase 2, or for that matter, Phase 3 or more phases after that. Because the president set out to do some things, as you said, very structural, for example, subsidies and state-owned enterprises and intellectual property and things that really would go to the essence of President Xi's regime in some respects. How likely is it that we're going to be able to make progress on those as opposed to getting them to buy, and this is important, buy more soybeans?
I don't think we're going to get a lot of progress. I mean, we have seen something even in this Phase 1 agreement, but again, it was things that China was already doing, including improving the conditions for foreign direct investment. But there's still many irritants for U.S. businesses operating in China, even as American businesses see a need to be there to serve a growing market. So I think there's still a lot of things that are on the table. I would also really like to see U.S. and China bringing in other trading partners. It's impossible to get real disciplines on industrial subsidies without bringing in more players. Same thing on state-owned enterprises. As you probably know, these are issues that were tackled in the Trans-Pacific Partnership, which President Trump pulled out of right away when he came into office. So unfortunately, we're out of that, but that does set up a template for a possible multilateral agreement where other countries are brought in. We can't have one country subsidizing outside of an agreement, pushing down global prices and say that we have made a level playing field for American businesses.
Well, we're out of the TPP because the president didn't want to be in the TPP, but it was more than that, wasn't it? It sounded